Hello, my name is Troy White. I'm a financial planner that specializes in real estate investments. What I'm here to talk to you today about is financial planning and real estate investments and how real estate investments support a well-diversified financial plan. Often when we think of financial planning, our thoughts go towards stocks, bonds, mutual funds, ETFs, and such. But what I want to convince you today is the importance of having real estate investments as part of your diversified portfolio in order to achieve real financial independence, especially as it relates to your retirement. First off, when we talk about financial planning and real estate investments, we better first identify, well, what is financial planning? And financial planning is a process that you undergo with your financial advisor, and that process starts with an interview to find out what your personal goals are. Because basically every goal you have has a monetary value attached to it. And you identify what your goals are and prioritize those goals, because often our goals compete with each other. So in order for you to really understand where I'm coming from, I first need to identify the essential components of a financial plan. Those are 6 areas: cash flow, emergency fund, protection, investment goals, retirement plan, divided into 2 categories, which are tax deferred and tax-free retirement accounts or investments. Okay, so when we talk about cash and cash flow, like I say, there are 2 separate entities, however they work hand in hand. So when I'm talking about cash, I mean your checking account, your debit card, the cash you may have in a safe deposit box, green in your pocket, the money under your mattress, money in a safe you have at home. Cash meaning assets that can be immediately used to purchase goods or services. Now, cash flow is what your cash comes from. Cash flow is what comes from your job, maybe some real estate investments that you have, some other form of investments, small business you may have, but you may be a trust fund kid, or you might have annuities, or some other means of cash flowing into your accounts. Now, we talk about cash and cash flow, but I must mention another important aspect of that category, and that is the household budget. The budget is basically the funnel that your cash flow pours into. Your entire financial plan is funded via your budget. You budget the amount of money that you can commit to your investments. I'm an advocate of pay yourself first, because there's no one else that's going to pay you. All the income that you receive potentially has other places where it needs to go. You have to pay your PG&E, your mortgage, your rent, your car, every hand is out asking you for your money. So if you don't budget to pull some out for yourself, it's never going to happen. So you can't even have an effective financial plan if you don't pay yourself first. The second thing I want to talk about is an emergency fund. Now, emergency fund, often referred to as a rainy day fund, is for just that, the rainy day, the time when there's an emergency that occurs that you better be prepared for it. I love this one saying, it's best to be prepared for an opportunity and that opportunity never arise than for an opportunity to arise and you not be prepared for it. The same holds true for a disaster. It's best to be prepared for a disaster and that disaster never occur than for a disaster occur and you not be prepared. So that's what an emergency fund is for. Now, emergency funds should be approximately 6 months of your living expenses. You should build that up slowly. It should be not liquid assets, because we don't want funds just sitting there that are not working for us. So it needs to be one step away from being liquid. What I mean by that, it should be money market funds, a CD, short-term CD. There are other investments that could go in there, but I recommend just those. The next aspect of a financial plan that we need to discuss is protection. Protection, simply stated, is some sort of insurance product. Insurance in the form of annuities and or plain old insurance. Now, people often have your car insured, you have your home insured, but I want you to think of it as the things that are most important to you in life should be insured. If I were to ask you, what's the most important thing to you? My children, my family. Well, you need to have your children and your family insured. How do you do that? There's various ways, but and we may get into it a little deeper later. I could spend more than an hour on this section of protection, but simply stated, you need home, health, life, auto insurance. You also need long-term care insurance. 70% of us will end up having a need for long-term care. I guarantee you, whatever plans you put in place from a financial planning perspective, you may have assets that are going to help you to live till 99. If you have a long-term care issue, especially an extended one, wreck your plans. And then the problem will be you'll live too long. You'll outlive your plan. So you need auto, home, health, life insurance. And life insurance, there's a term versus perm, and I shouldn't say versus, there's a term and a perm, meaning term is a temporary life insurance, perm is permanent. Slightly different needs, different uses, but from on the permanent side, I look at it as partially an investment. Permanent insurance has a death benefit and an investment component, part that you can borrow from, and that's tax-free. And I'm an advocate of killing two birds with one stone if possible, and permanent life insurance definitely does that. It can be as a part of your retirement plan, as well as a part of your protection, as well as a part of your investment goals. So that's something that you need to spend a significant amount of time working with your financial advisor on, is the protection aspect of your plan, specifically the life insurance portion and the long-term care portion. Now, when we talk about investment goals, we have to divide those goals into short-term, mid-range, and long-term goals. As I mentioned before, we have to prioritize your goals. Why? Because your goals compete for the same dollars. You have, based on your budget, you have a finite amount of dollars to invest into your financial planning. Now, you have often an infinite number of things you'd like to achieve with the same dollars. So we have to prioritize from short to long. As I mentioned before, your retirement goals can be divided into two categories, which are tax-deferred and tax-free investments. Now, the tax-deferred accounts are things like your 401k, your IRAs, your SEPs, your TSAs, pensions, and don't forget self-directed IRA accounts. Those are excellent for real estate investing. Then we move on to your tax-free investments for retirement. And that could be tax-free investments and investment accounts. Those are going to be things like a Roth IRA or a Roth 401k. Those are accounts that you invest in after-tax dollars versus before-tax dollars. When we went over the financial plan, we identify how it all stems from cash flow. The cash flow is what funds your plan, is what protects you and your family and your assets. It's what is going to allow you to achieve your financial goals via your investments, and it's what funds your retirement. What do we start with? Cash and cash flow. You may have heard the common statement, cash is king. I agree. Now, if I have any chess players out there, you know the king is the most important piece on the board, but the queen is the most powerful piece on the board. So if cash is king, cash flow must be queen, and cash flow is certainly more powerful than cash. And remember, I said there's a price tag to whatever you're trying to achieve in life. You know, you hear the statement, money isn't everything. All right, whatever. But money is going to help you achieve that goal. So we're going to need cash flow. Real estate is what is an excellent vehicle to provide cash flow. You leverage this asset with 20 to 30% of your input. The tenants purchase the rest for you. The asset appreciates over time, and it generates cash flow for you the entire time. That cash flow helps to fund your entire financial plan, all of your investment goals, and your retirement. What other asset can do such stocks, bonds, mutual funds are all important. Your financial plan and your retirement both require cash flow. If you want to achieve real financial independence, it's going to require some real estate investing. Your real estate investing needs to be a part of and in conjunction with a well-diversified investment portfolio. If you have any questions, feel free to give me a call, send me an email. My contact information is listed below. Thanks for listening. Appreciate your time. Hope to hear from you soon.